Ryan, what's up, my man? Welcome to the SABM podcast.
Hey Scott, thanks for having me here today.
Yeah, man, and it's been I know we've had a few conversations over the years and finally got you guys in front of the investor group, the last couple of months. So I've really enjoyed watching your pitches and you guys have done a great job there and congrats on all the cool work you're doing in the veteran community. And so today we're going to talk about the veteran fund, and you're a co-founder. And maybe just to kick things off, if you just want to introduce yourself and share a little bit about your background and what led you to start the veteran fund.
I'd love to. And first of all, thank you for having me here. It's been great working with your crew and getting to know members of your community. So excited to deepen the collaboration. So the Veteran Fund really goes all the way back to 2010. That was when I was serving in the reserves. I did 6 years in the California National Guard on the enlisted side. I was a radio operator. And I was also working with startups at the time. I was born and raised here in the Bay Area and knew that venture was always in my future. So I dove into tech and tech startups right out of college, and I was serving in the reserves. And I realized that the skills you learn in the military are the same skills that you need to succeed as an entrepreneur. But at the time, there was no veteran startup ecosystem. And when you look back, like the early 2000s, so many capable men and women raised their right hand to go and serve after 9/11. And that was also when tech really started to take off after the dot-com bubble burst. And so some veterans got left behind when it came to the technology and adoption. And so what you're seeing now, fast forward, 20 years, veterans have been out of the service for 10 plus years. They have deep industry expertise and knowledge. They've been working in the private sector. And so you're seeing, really when we started the fund, this kind of surge of new veteran-led technology companies that really didn't exist before. And so anyway, so going back to the origin story, because there was no veteran startup ecosystem back then, I started VetTech with Bo Rogers, which was the very first veteran-led startup accelerator in the country. We're headquartered out of the Plug and Play Tech Center, which is a massive international startup incubator and accelerator. They're in Sunnyvale in California. And we were the landing zone for veterans who wanted to get investment from venture capitalists, get mentorship from experienced entrepreneurs, and access the corporate partner network of Plug and Play. And we did that for several years, worked with some really great founders, built a strong portfolio. And that led to the opportunity for me to join the Founder Institute as head of global operations. So, Founder Institute is the largest pre seed startup accelerator in the world. I led the team for 11 years that helped us scale to over 8,000 companies across 200 cities. In that experience, I also built a personal portfolio of 800 startups. So my role was really focused on I ran the Silicon Valley Accelerator in Palo Alto. So probably close to, at my time there, I probably run like 40 accelerator programs and work with some great founders. In addition to running the accelerator itself locally in Silicon Valley, I was also the manager that looked over all of the different accelerator programs around the world, from New York and LA to Paris, Nigeria, South Africa, Kazakhstan. We even had a program in Kabul for, I think, 2 years in 2015. And so that was a really great experience. It was kind of trial by fire. I learned a lot about building startup ecosystems globally. And when you look at the Veteran Fund now, it is very much it's venture plus ecosystem building in the veteran community. In 2021, one of my portfolio companies had a successful exit. It was led by an Air Force veteran named Mike Frazier. And what we saw is that when veterans have successful outcomes, they want to come back and serve the community. So Mike said he wants to invest in more veteran-led companies, and it was really the spark of the Veteran Fund. Like that was really the genesis. And the idea was if we could find the best veteran leaders who are building the most important technologies, back them with early capital, and then help them secure non-dilutive funding, that's a recipe for a very strong performing portfolio of startups. And what started off as an idea has quickly blossomed into one of the top performing venture capital funds in the country, based on not only our portfolio companies, but on the fund performance and return profile. So we officially kicked off the fund in 2022. this was like, before, and then I think it was like a month or two later, the Ukraine war broke out. And then around that same time, Andreessen Horowitz launched their American Dynamism practice. And so we got in very early into this whole critical tech movement that you're seeing happen now. And it's grown very, very quickly over the last few years. So we set out to raise a $10 million proof of concept fund, oversubscribed it to 20.2 in one of the most challenging fundraising periods in recent history. And I think the testament of that is really the mission and the people that have decided to back us. And I can dive in a little bit deeper there, but that fund invested in 27 companies. We looked at 5,000 companies to get to the 27. And now we are launching Fund Two, which is a $50 million fund with the same exact thesis, focused on investing in veteran-led critical technology companies that are at the seed stage. The only difference is that with a larger fund, we're writing a larger check. So think of a $1 to $2 million check into a seed round.
Gotcha. Well, congrats, man. That's a lot of deals that you've been involved with over the decades, and just a lot of experience in the space. I always wonder, so I think you've described your deal box pretty well. Is there like a certain like are some of these like pre-revenue, or are there most of them, post-revenue? I guess if you had to describe your perfect deal, like is there a way you can maybe niche it down one step further to like when I see one like this, like we feel like it's a winner and we want to invest.
Totally. Yeah. At the early stages, we are very much betting on the team. And
Okay.
so when we meet an exceptional team, that's where the strong interest really kicks in. You can back into the market fundamentals, their go-to-market strategy and all of that, but like it really all is anchored by the team. So we want to see like a really strong founding team that pairs strong veteran leadership. So they don't have to be the founder necessarily. Ideally, they're a co-founder or co-founder or a very early team member on the executive team. That's the criteria we look for veteran led. And then seed stage is really, below $25 million valuations, which in these days it's like, seed rounds, you'd have a $5 million seed round at like a $50 million valuation. And that used to be called a Series A. Now it's seed. And so for us, it's really more about like, can the opportunity and the team and the traction justify that valuation? And so that's generally what we target. Some of them are pre-revenue, but all of them are post-traction. So with the Department of Defense, and when you go after like dual use companies, a lot of founders will at least have some kind of cyber phase two, maybe. They have to have some, we want to see that there's proof that the customers want the technology and that it's viable and that the team has been able to build it. Now, some things that we've seen from our top performing teams are, deep domain expertise. So they're not someone that just woke up, they got out of the military and had a startup idea. That's great. That's where I started. And like I think like, it's an important place to start and you have to kind of figure it out. But what we want to see is, somewhere between like 5 to 10 years of like deep expertise in that space. We love second time founders just because they've been through the ringer before and they know what to expect. And we think that the failure rate is drastically lower with them. And then we want to see a good team dynamic. A lot of people think that the veteran fund, because of our name and because some of our top performing companies, that we're a defense tech fund. We're actually more than. In fact, most of our companies are commercial first, dual use. While we do have some pure play defense tech companies, we want to make sure that we have a diversified portfolio of commercial companies, companies that maybe have the government as a potential customer, not just defense tech, but we use the term critical technologies, which encompasses a lot more of the different technology areas.
Gotcha. Yeah, that makes a lot of sense too. Like diversity and customer base. Like if you just have the government as your customer, obviously, like, there's a concentration there for sure. What do you have any like one or two favorite success stories from Fund One, or something that like man, like this was really cool, or
Yeah.
would love to hear some of those as well.
There's like, so I love all my children equally. I'll just say that. One of my favorite stories, though, is with Paul Wynn from Havok, because when we met Paul, it was one of those moments in the first 2 minutes of the conversation where like we're definitely backing this founder. So Paul was originally from Myanmar, and he was a refugee. He literally opened the conversation that said, "If it wasn't for the Marines who came in and saved my family, I'd be dead." And
Mm.
so they were rescued. They came over to the US, and he spent his entire life giving back to the United States. So he eventually went to the Naval Academy, became a naval flight officer, was very technical, was a CTO at like an autonomy startup, and just had like the right makeup of service-based leadership, high integrity, strong resilience to adversity, and that deep domain expertise in autonomy. And so we knew we're just like, okay. And then he was also building in an area that we knew was going to grow. While you have all these big companies, so what Havok AI does is they build attritable autonomous systems, starting with surface vessels. So think drone boats, but really like that's just one form factor. The important part about Havok is the brain. It's the software that runs that on how do you have one sailor or one Marine control thousands of unmanned autonomous assets where they're not necessarily having to use waypoints and pinpoint areas for those things to go. They have their command and they're going out and doing it automatically and autonomously. So that's where there are companies that are building in that space, but a lot of them are building these big exquisite systems. Like it's like an F-35 on the water. And while that's important and that's good technology, it's a great opportunity. We know that the future of warfare is low cost, it's economic warfare, it's attritable systems that could be produced and scaled very quickly. And since we saw that that was the direction the Department of, at the time, the Department of Defense was heading, and we saw what Paul was building, it was a no-brainer. And so we ended up writing our biggest check out of Fund One into that company. And proud to share that as of a week ago, or a few weeks ago, they closed their $100 million Series A.
Oh, wow. Congrats. Really exciting, man. That's really cool. And yeah, I know I've seen that they're a name around like LinkedIn and folks talking about Havok AI, and so that's pretty cool that you guys were involved early on. How is fun? So now you're on Fund Two, and that's what you've been presenting to the investor group over the last few months. How is like Fund Two evolved from Fund One? And maybe there's some things, investments you made or decisions you made in Fund One as you were getting started. They're like, hey, like this one, won't do this one again, right? I know we've run through that, from Fund One to Fund Two to Fund Three. It took us three times to kind of figure out our deal box and get it right. But for you guys, what are some of the maybe lessons learned from Fund One that you're now applying to Fund Two? And are there any differences in Fund Two versus Fund One?
Yeah, so there are structural differences in terms of the check size and some of the mechanics, which I'll run through. But I think just as managers, we've evolved and gotten sharper and better, and our processes have also improved. And so whereas we were first-time managers of Fund One, Fund Two, we've taken all of the knowledge and experience that we've learned and applied it. We're really big, and this is big in the veteran community too, of like, hey, what are some things that we can do better? What are some things that we did really well? And when we looked at the kind of the superpowers of Fund One, we realized that founders really like having us on their cap table because they know that along with a check from the veteran fund, they get strong exposure to the veteran and defense community. And they also get that bench of LPs that we have. So unlike other firms, we put all of our LPs on our website, which shows the strength of the veteran fund and our level of access. And so because of the work that we've done in Fund One, I would also say in Fund Two, our access is much stronger than it was before. We're now squarely at the center of the veteran startup ecosystem, looking and finding some of the best companies that are being led by veterans. And a lot of that comes from our VC partners that we co-invest with. From a fund strategy standpoint, same thesis of veteran-led critical technology seed stage. That hasn't changed because that's just where our strength is. And whereas some other funds will go on and they'll raise like a $20 million fund, then a 50, then 150, then a 250, then 500. They want to keep going up that capital stack. And for us, like we're doing this because we love it. And like, yes, you can make money, and our goal is to make money for our investors. But like we wake up every day excited about this, and it's because we're focused in an area where we have sort of unmatched expertise. So we want to consistently do these kind of $50 million to $70 million fund vehicles consistently because we know that one, those funds are much easier to make money in return. So our LPs will like that more when they're making more money. And then two, we like helping founders at that kind of early inflection point, right? We love kind of backing them early and then supporting them with our network. So from for the differences though that we've applied is one is the check size is a little bit bigger. That gives us more ownership up front. And I think the biggest change from fund one to fund two is fund one, our allocation strategy was half of the fund would be used for a first check, and then the other half would be used to follow on into the companies that were starting to break out. And while that's a good strategy, I think that works better for funds that are bigger, where they have a lot more capital to deploy and they need to concentrate capital in their winner. For us, what we found is you actually, and we modeled this out, we spoke to a bunch of institutional LPs, and what they told us is their best performing funds at our stage and size had more of an 80-20 first check to follow on. And what that means is
Mm.
that they write bigger checks up front for more meaningful ownership, and then they write smaller follow-on checks in a few of their companies, so they follow on less. And effectively, what that does is we like to say that the fund is returned in that first check. If you can get the right level of ownership, if you can write the right size check, that you're never going to get better economics and better ownership
Mhm.
than from that first check. And so our strategy now is to write that bigger check up front, but then leverage our network of investors and LPs to do the follow on because we have something valuable, which is pro rata in these investments. We don't want to just throw that away. We want to either give that to our partners, so other VC firms that want to invest on the cap table, or we want to create special purpose vehicles and direct investment opportunities so that our LPs can get direct exposure to our top performing veteran led companies.
Really cool, man. That's yeah, I've that's really interesting to know, and not something that you knew when you started Fund One of like what the allocation of capital should be for like your early investments versus your follow-on investments. So, um, pretty cool, pretty cool. What do you guys do? I know that I know a few investors in the veteran fund, and I know that you guys do events and like you've got ways that you bring together the investors and probably also the portfolio companies, I'd imagine. So you mentioned the word ecosystem a few times throughout the podcast. And I think that that's really important just for investors to see, first of all, like who they're investing in, right? And then also for the companies and the founders and the leaders of those and companies that you invest in to connect with like other business owners that are also growing companies. Like, I just feel like that ecosystem dynamic is really an X factor, right? Where, where the founders become stronger because they're connected with each other and the investor community could become stronger because they can see and they can shake the hands of the people that they're investing. I think it's really cool. So I'm just kind of curious of the community aspect and the ecosystem aspect of what you guys do as well.
That's exactly right. It is one of the X factors that are most important. It's the X factor that'll prevent me from being replaced by AI. And I think there's a couple different layers to it. So we do virtual lunch and learns with our LPs, which is great. It's like continuing education. It's kind of like the monthly or quarterly kind of check-in. We'll run LP dedicated like fund update calls where we'll bring our LPs together. They can kind of introduce themselves to each other virtually, and then we'll give like fund updates. We'll even bring in portfolio company CEOs to give updates as well. We run in-person events. So I am based here in the Bay Area. I got three kids and a wife, so I don't do a ton of travel for the fund. I'm probably like monthly. I'm on the road. But Mike I mean, he's just a traveling beast. You should see his schedule, but he's at every major event. He's on the road constantly. He's out there, on the front lines meeting with people. And that's really great because we can piggyback on existing events. So if we go to Emerge, we can host a dinner or we can like meet up with other folks. at those events. So that relationship building is very important at this stage. And then we also have we do an annual summit, our AGM. This year it's going to be in San Diego in September, and that's where we invite all of our LPs to come join us. There's usually a dinner beforehand. The next day is like all portfolio updates. We'll bring in our CEOs. In the last few years, we actually brought them out to a shooting range to go and shoot guns and like do some fun offsite stuff just to build the relationships amongst each other. And so we try to bring in fun and joy into what we do because, if you're not having fun, it's not worth doing.
Yeah, really cool. And then I was reading your update yesterday that you sent out your quarterly newsletter. And I saw Richard Branson's picture, so that was pretty cool. I don't know how Mike ended up on Necker Island, but he does get out and shake hands, it sounds like.
Yeah, yeah, that's the magic of Mike. So yeah, so the Necker Island, we're actually putting together an event next year for our LPs and other people in the community who want to go to Necker Island. That was a special event. Unfortunately, I couldn't make it, but that's why we have Mike. And it was through our partner, Liberty Ventures, Alex McCorbin, who's been a really big supporter of the fund, and he's been great. He's got a strong relationship with Richard and has been taking folks to Necker Island, and so he actually gave us the opportunity to go. So we're working on a joint event to go back there next year.
Well, cool to see, and definitely recommend folks, subscribing to your newsletter. I'm not sure how they get onto it if they have to be an investor, but go to the website and it's really cool to follow you guys and see all the cool things that you're doing. What would you say are some of your most important goals? So we're about halfway through the year. Um, so for the back half of this year, what are some of your most important goals? Maybe short term, and then also like maybe if we look out over the horizon 3 to 5 years from now, uh, what would you like to achieve?
Yeah. Great question. Short term for the end of this year, we want to raise our full 50 million for the fund. We're about halfway there. We've got verbals that could potentially get us there. But in VC, you have like your fund target and then you have a hard cap. So our hard cap is 70 million. We want to try and get to the full 70 because what we're seeing is like the pace of innovation is just growing faster and faster every single day. The pace of competition is growing faster and faster every day, and we need the capital to fund and back these companies faster and more aggressively than ever. So we want to try and raise as much capital in this fund, trying to hit that 70 million hard cap by the end of this year, ideally by Veterans Day, November 11th. Um, so that is like the number one short-term goal is like meeting with the family offices and the folks that can write those bigger checks that want exposure to the space. When I zoom out and let's say we close the fund by the end of this year and we continue deploying into great companies, that's kind of the core flywheel. But I think there's a bigger, longer term play and that we're interested in, which is continuing to build out that investor ecosystem. We like to say we planted the flag in 2022, investing in these types of companies before it was cool and before people really got it. We want to continue to beat the drum of America is the greatest country in the world and in human civilization. It's the most innovative. It produces the most wealth for the most amount of people. Capitalism has lifted the most people out of poverty of any system known to mankind. And while it's not perfect, it's good. It's very good. And we want to continue to make sure that the future generations of Americans are proud to be American. I remember there was a time, kind of 2010 to 2020, where it was like, do you wave the American flag? Do the kids do the Pledge of Allegiance at school?
Mhm.
And when you think about that, that's insane. Of course you do. Like, that is the one thing, being an American is the one thing that ties everyone together. And if you're not proud to be an American, like, I think that means there's some structural issue because even if you don't agree with what particular administration, and even if you have certain political views, the one thing everyone should be able to agree on is that they love their country and they're proud to be an American. And if we are not doing a good job of sharing that story and that narrative as a country, then we're doomed because that divisiveness will kill us. It'll kill our democracy and our republic. And so we're very much, there is this cultural aspect of like instilling that in future generations. And the best way to do that is through entrepreneurship. I mean, entrepreneurship really is that innovation engine that will continue the to grow the narrative of capitalism matters, of being proud to be an American. So we want to make sure that that continues. So there's different ways we can do that. We're looking at supporting veteran founders that are maybe even outside of our thesis in different ways. We do have a veteran accelerator through the Founder Institute that gives free scholarships to any veteran who wants to launch a startup. So that's one aspect there. And then, another aspect is like how do you inspire that next generation of kids and kind of teenagers who want to serve their country and feel proud to do it.
Amen. Man, well, I think you just kind of summed it all up right there, man. That was like what you're doing is I mean, it's very important. It's in a number of different ways and really cool. I mean, I think that's almost a great place to end.
Yeah.
Put a punctuation mark. But I would like to ask, like, if you have any challenges, any particular asks, any specific skill sets or types of people or maybe potential team members. Like, if you've got an ask, I'd love for you to maybe share it, and the folks that are listening would love to help you out in some way.
Yeah, the big ask right now is if this message resonates with you, share it far and wide, right? With anyone. And particularly like we are trying to connect with more family offices, more patriotic capital, more high net worth investors who are like, wait a minute, I can back veterans in the most meaningful way possible and make venture scale returns at the same time. I think that it's an incredible opportunity for anyone who's patriotic and who believes in what we're doing.
Awesome, Ryan. And what's the best way for folks to learn more about the Veteran Fund and get in touch with you?
Yeah, our website is veteran.fund, and there is a contact us form there, or anyone can email me at ryan@veteran.fund.
Awesome. And we'll put also add your LinkedIn page to the show notes as well, as well as your website. And so folks can reach out and learn more about what you do. And hey, Ryan, congrats on all your success, man. It's been, a long time coming, years and years of looking at deals and, shaping your investment philosophy and creating your first fund and now your second fund. And it's really exciting to see. So congrats on all your success. And here's to an awesome finish to 2026.
Yeah, thank you, Scott. Really appreciate it.